Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Friday, August 12th, 5:05 p.m. Eastern Time, coming to you from the financial capital of the world, St. Augustine Beach, Florida, with the big show, the Friday edition of the Revere Market Insight video, where we take a look back at the prior week, take a look ahead at key levels for next week, and update the world famous 21 over 21 list. And I'm including 10 bonus stocks this week. There are a lot of great leadership quality stocks out there, and want to make sure you're aware of all of them. These 10 are knocking on the 21 over 21 window, begging to be let in. And we'll go through them all. So let's get into it. State of the market. We are in an uptrend, emphatically in an uptrend. Well, the market stated emphatically on Friday that this is an uptrend after a negative reversal on Thursday. A great response by the bulls. Let's take a look over here at the trend gauge market leaders. Very clearly bullish / uptrend. Short-term 21-day exponential moving average, bullish uptrend, but 4.8% extended from the 21-day exponential moving average. We got to bring out the stop sign there as a caution. Now, we always wait to we've been extended 4.8% above before, but there were not 21 sessions after the 21-day exponential moving average turned higher, and that can skew the results. For example, we're extremely extended from the 50-day moving average, but the slope of the line recently changed, and when that happens, you can get extended and really not be extended. So I'm more concerned about the longer term 21 level than I am the 50-day moving average. So caution warranted there. Long term, breaking out the green sub arrow for the first time as well, you'll see the small and mid cap indexes where they ended up versus their 200-day moving average, but a pause and then a bust above, as you'll see when we go through the chart. So what happened today, I've pretty much described it. Gap up plus trend up equals bears burnt. That's a good equation to summarize all the green that I'm showing here on the various indexes. Our G6 growth index up 2.08%, S&P up 1.73, NASDAQ 100 up 1.95, Dow up 1.3, midcaps 1.5, Russell up 2.1. Global diversified 60/40 stock and bond index up just below 1%. In-house GROTECTION up approximately 1.53%. We'll get to the tail of the tape and the updated charts in a moment, but first, let me describe what we at Revere do. Trend following means, in my opinion, the most common sense and best of both worlds approach to life and to the markets. When something's going wrong in your life, you take corrective action, or you're going to end up in trouble. The same thing happens with your portfolio. You don't take corrective action when we've got a bear market staring you in the face. And don't say you can't, nobody saw it coming. When you break below the 200-day moving average, that's the black line here. That's the long-term trend. That is the signal for you to get the heck out of the way. This is where all bear markets occur, period. All bear markets occur below the 200-day moving average. You follow that one rule to get out of the way. When you're under the 200-day moving average, you save yourself a lot of financial heartache and a lot of emotional heartache too. So, but then, well, how do you get back in? How will you know? Well, that's what these shorter term indicators are for. The green line is our short term 21-day exponential moving average. The red line is our intermediate term 50-day moving average. Note how 21 trading days ago, the 21-day moving average turned higher. The couple of other times that we got back above it, it was barely turned higher. You can see this consolidation that we had here 2 months ago. We failed there. We took a couple of steps in here, and here stopped out for small losses here, small losses here, getting nice gains here. In fact, we've got 20% gains in our SSO position now off of this re-entry at the 21-day exponential moving average. So if you can get in as close to this level as possible and see where the trend takes you, you never know when you catch a wave how far it's going to take you. At some point you'll get to the shore and it's going to be time to get off, but ride that wave as long as you can. And then we got above the 50-day, and now the 50-day is turning higher. But as you can see, the numbers here in the S&P, 4.8% above the 21, 8.3% above the 50. That's typically a very extended number, but as I said, when the slope of the line just recently changes, you can't pay attention to it. You have to have a line that's trending higher for at least the number of days that at least that's the way I do it. I mean, you can do what you want, but so yeah, we got 21 days now since we turned up on the 21-day exponential moving average, and we're extended and we're coming into the 200-day here. Take note of that. So that's what we do at Revere. We follow the trend. Going above the trends, we participate in the market. Trend starts rolling over, we pull back. Trend rolls over completely, we get out of the way. Trend starts to turn back up, we get back in. Kind of makes sense to me anyway. Seems a common sense approach. And if you're interested in learning more about this approach, email me, don@revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. Not to say that we've got all the answers and we hit it right all the time. We don't. We make plenty of mistakes. But when we're wrong small. We don't let the mistakes permeate or perpetuate and cause problems. We cut losing positions quickly, and that's a key. Any successful trader will say that. Warren Buffett will say that he doesn't want to lose money, so don't tell me he doesn't time the market. He goes in and out of positions all the time. So anyway, that's our trend following spiel. Let's bring up the tail of the tape and get to the indexes. So S&P 500, very clear. Let's bring up a 10-minute chart here, and you can see breakout here on CPI, follow through after PPI the following day, up, turned lower, bears emboldened. We reversed. We're going lower. Nope, not going lower. We gapped up Friday, and look at this buying. We call this a frozen rope, when it just keeps going higher and higher and higher and higher. No opportunity for a pullback to get into. The strongest trends do this. After we busted above this little consolidation in the morning here, a little bull flag right here, breakout candle right here, boom, off to the races. The bulls with an emphatic response to the late day bearishness on Thursday, now within 1.1% of the 200-day moving average. That's bullish. Let's go to the NASDAQ 100. Actually ended up breaking above at the end of the day Thursday's highs also, and closed above Thursday's highs. That's bullish. Nice move up off of the lows. No relative strength this week. We kind of flagged on a relative strength standpoint as oils and fertilizers and steels made a little bit of a comeback. So no outperformance on the NASDAQ 100 this week, but a very strong move off of the lows. Let's go to the Dow Jones Industrial Average, which is coming up to its 200-day moving average, also only 0.4% away from it. Cleared this consolidation here. Two closes above the 150-day declining moving average. I failed to mention that yet, but I did bring it up yesterday, which is where we failed on the S&P. Emphatic response to that failure yesterday. So that resistance will turn into support the next time the market opens, until the market breaks back below it. MDY, that's a close above the 200-day moving average, folks. After reversing yesterday, this is why that sub arrow turned from black to green on our trend gauge. A close above the 200-day moving average, first of the indexes to do it. second of the indexes to do it, just barely 0.3%, but the small caps with a close above their 200-day moving average also. Note the relative strength over the last week and a half that showed up. Really, it kind of started back here on mid-July when this big run kind of started. So this run led by tech, small, and mid cap. Look at the relative strength on the mid cap line here. Also, this again started mid-July, a little bit of a pullback here as it flagged, reasserted itself over the last 6-7 sessions. Gotta love seeing that. Two indexes closing above the 200-day moving average for the first time. That's a big change for the bulls, and the bears are tried to come out of hibernation a couple times over the last couple of weeks. Every time they did, they were met with a crowd with torches singeing their fur, and they've turned around and have gone back into the cave. So let's get to the tail of the tape here now. Got the headwinds. Nothing's changed there. Market always climbs a wall of worry. But if you hung your hat on these headwinds and didn't participate, you were ignoring what was going on with price since the middle of July. Sentiment put call 0.95. VIX now under 20. Fear and greed coming up from the neutral zone to greed at 55. Still on our bull case as we've been since 727 with the Fed, the follow through after the Fed announcement. News today, several China companies decided to delist from the U.S. exchanges because they don't want to follow the U.S. auditing requirements to be on the exchanges. So see ya. Notes. Market strong despite the dollar up. We've been talking about this inter-asset correlation or non-correlation lately, but the dollar was strong today and the market just shrugged it off and went higher too. Fed's barking came out and did some barking, said rates are going to continue to rise until we get consistent 2% inflation. Market didn't care about that either. That's not bullish. Hearing a Fed guy talk like that, we're going to continue to raise rates until inflation comes down to what's at 8% now, all the way down to 2%. Really, how's he going to put that genie back in the bottle? How high will rates have to rise until that happens? We don't know, but we're going to follow the price action on the charts and not what a talking head is saying. So coming into today, we're expecting bullish to neutral action after the CPI breakout, and we got it. Bullish response versus Thursday's bearish negative reversal puts an emphasis on the fact that the bulls are in control here. Emotionally coming in, I want to exercise patience with current holdings. Don't want to sell something out too quickly if it's continuing to run up. A lot of our holdings did very well today. We're not in the situation where when you get those low double-digit gains that you want to book them anymore. You want to try to let these things run because this is by far the strongest run off of the lows that we've had since we turned into a bear market and rolled over in the beginning of January. So what we were watching, our support and resistance levels, got through R1 today emphatically. On the S&P 500, on the Qs, we got through our first and second resistance levels, closing above this 330 level on the NASDAQ 100. More bullishness there. Here's what the action happened intraday, that frozen rope I mentioned. I always note these. What was the overnight range? Where did we open? How did we do the first 30 and 60 minutes? You see the double plus sign here. Usually to keep these videos shorter, I don't want to comment on it, but when you break firmly above the 30 and 60 opening session, the bulls are in charge, plain and simple. That gives you confidence to add some things to the market. And here was the lows and the highs, 60-point range from 42.20 to 42.80. Here are some other figures which I covered on the first line. Sectors, UUP strong, bonds up, rates down, in other words. 11 out of 11 sectors, all green. That's some power. Semiconductors, biotech, gold. The only thing weak was oil. Oil stocks were red initially, but turned to green, although, a little bit of relative strength lacking there, and also for staples, but they did turn green. And KWeb, in response to this China company's deciding to delist. So what do we do in house today? So took off half of the hedge that we put on when we had a short-term break from the breakout, which we had on Wednesday. We put a little bit of a hedge on. We took half of it off, looked for another opportunity throughout the rest of the day to take it off, but we got so extended that it made sense it skewed the risk reward toward holding it. This adjusted our beta from a 0.98 up to a 1.12. Yeah, we're still holding a 0.5% hedge. We're down about 3% on it on the QID. But at this point, with the stop sign coming out, it makes better sense to hold on to it than it does to get rid of it. Bottom line, bullish response to Thursday's negative reversal, new recovery highs, not much more than the bulls could ask for. Here are the updated S&P key levels. Next overhead for the S&P, this declining 200-day moving average, which is about 50 points higher. And then after that, well, we're going to have to add we have to get rid of some of these support levels down here. Over the weekend, I'll update that and add some more resistance levels, as a lot of these are obsolete now when we get so far above it. So good news for the bulls. Let's get to the 21 over 21 list first. Let's show the stocks that we punted this week. BJ's knocked off, closed below the 21. Earnings in 6 days. Look at the lack of relative strength over the last 3 weeks in this. This was a good place to park money when growth wasn't working. Growth started working. Money flowed away from this. Chart looks fine. Nothing wrong with it. First close below the 21, but relative strength lagging. We want to be in relative leaders. Second one was BMBL, Bumble. Gap down on its earnings report, closed below the 50, and comes off the list. The third one was something that we owned. Chart looks fantastic. Relatively speaking, it doesn't, though. Look at when I calculated our holding period for TMUS, first of all, I got an alert when it went below the ADMA yesterday. I took a look at it, compared it to where it was. The market had a negative reversal at this point, and I just locked in a small 3% gain on the 6% position, got rid of it. Nice update today, below average volume. Nothing wrong with this unless you're looking for things to do better than the S&P 500. So during the holding period, this has underperformed the S&P 500. That's by definition not a leader. Chart looks fine, relative strength line not confirming the price action. That's why this relative strength line is so important, and it's on here. No real reason to sell it unless you're looking to replace it with something that's offering you better risk reward. And there, as I said, are a lot of good leading stocks out there, some that are setting up with power and some that have already broken out that we want to look at on pullbacks. So those are the three that were booted off. The three that were added are things that we bought. LNG, nice breakout, relative strength confirming it, volume is there, past earnings, this thing looks fantastic, accelerating 87% earnings into 2023 also. And Michael's done a deep dive on the fundamentals of this and talks glowingly about the company. MPWR, another one that we bought this week. Nice move up with volume on earnings flagging there at the top of its range. Like the look of this, like the fundamentals. Great earnings report, great follow through, pullback. Didn't like this big volume day here, but it held this big 500 level, and then negative reversal yesterday along with the market. Not a lot of juice today, but some semiconductors did have. But this looks great, nothing wrong with this. And then the third one that we added is something that really didn't treat me well after we bought the gap up yesterday, the big volume gap up. This reversed along with the market harshly. We sold half of it. We only have a 1% position in this now. Rebounded off the 150-day moving average, one closed below the 21. We're going to give this a shot too. And the reason we're giving it a shot is because of these big blue volume bars here leading into the earnings report. And the big gap up caught me. It reversed. That's a risk that you take. But as always, we keep our target 0.2% to the downside versus for the overall portfolio is where we set our initial stop after we take a 2% position, so that we don't ever get anything worse than a paper cut. So Bros is the third one added. Now let's go through the whole 21 over 21 list, and then we'll do the 10 that are knocking on the door from the outside. We showed the 3 that were added. Let's go to net. We hold a position in this big gap up on earnings, following through to the upside, relative strength confirming. Yes, I'm aware it's below the declining 200-day moving average, but it's 300%, 27% move up on earnings and continued follow through. I'm fine with this. Chipotle has also followed through in fine fashion since its earnings report. Onsemi, great day today. Nobody wanted this on Tuesday. We trimmed a third of our position when it hit our pyramid stop, but it ended up bouncing right off the 21-day moving average, and now a big day today. Decent volume, up 7%. Blue ball indicating relative strength at a new high. Also, just starting to break out of this long flat base, could have a lot more room to run. Great day for ON. M-phase flagging very nicely here after its 2 gaps up, not giving anything back. This is one that we're eyeing to add to on any pullbacks or a strong volume break now above the 300 level as it's rested for a couple of weeks. CDNS, cup and handle just kind of breaking out, volume not there yet, but this looks great along with the fundamentals. Amazon into this declining 200-day moving average, continued higher after its earnings gap up. Relative strength flagging a little bit. We'd like to see this improve. Maybe a nice high volume move above the 200-day moving averages in the cards next week. DHI, everybody's saying that building stocks weren't working. Now, relative strength has been lagging a little bit the last 3 weeks. We're keeping an eye on that. But interest rates have come down, given this sector a little bit of juice, and we want to keep an eye on this. Apple just continues higher. Relative strength new high. Price at a new high before price. Price new highs up here at 182 and 179. Can't argue with that relative strength line. It's a thing of beauty. Silvergate, nice tight for Silvergate anyway. Nice tight consolidation over the last 8 sessions after clearing the Livermore 100 mark. Looking for some volume to come into this next week and take it higher. Tesla had a kind of a tough week, but buyers came into it today off this 21 and 150-day moving average. Needs to get back up through the 200-day moving average. Hopefully Elon's done selling. That's what crushed it on these 3 days here. Roblox, all ready to strike this off the list after it gapped down after hours on its Tuesday earnings report. But opened up right at the 21 and buyers came in. This is sometimes gaps down can be a buying opportunity if it gets rid of all the sellers at a key area. And this is what happened with Roblox right at the 21, day 2 higher high, inside day today. The volumes there. People ended up buying, not selling Roblox, despite what was initially a disappointing earnings report. Lantheus Holdings, very light volume consolidation today after a big earnings shakeout here. It continued higher. This looked like it could be a death knell for it, but buyers have come in over the last couple of days since its earnings report. All-time highs are okay with me. Celsius, this is one I didn't have a cushion, so we had to sell it before earnings. Nice reaction to earnings, holding this century mark. I like how it's consolidating this move up here. Maybe we get a 3 weeks tight and an opportunity to get back into it. CNC continues to move higher. Defensive group lagging a little bit on the relative strength area, but nothing wrong with the price action. And as long as the 3-month relative strength stays above 70, we can keep it in here. GTLB, TMUS broke below 70 yesterday. That was another reason why it was punted. GTLB looking fine, 3 tight days after the gap up on Wednesday. Power continues higher. Had a little bit of a sell-off here, but held the 21 after its gap up here. Gap down on earnings, but bought after earnings. Another situation where an earnings gap down was bought and buyers came into it. SWAV on my top 5 list, must own stock. Just this is a very rare and powerful reaction to earnings. Up 17% on 222% volume on its earnings day. Day 2 higher high, day 3 higher high, day 4 higher high, and the lows never violated the lows of the prior day. We're looking for ways to put more capital into Shockwave Medical. I've heard it described as a technology that's about as revolutionary as when Intuitive Surgical came out with their Da Vinci device. And finally, something barely holding on to the 21 over 21 list, relative strength lagging, and this is just because it's defensive. It's not a go-go strong stock, but American Tower. It's been on the list for a while, back when value stocks were in vogue, right at the critical 70 cutoff for 3-month relative strength. Wouldn't be surprised if this is replaced with something more valuable next week, and that would probably be just in time for growth to go into a period of consolidation and selling and have money flow back into these stocks. But for now, still on the list. Now let's get to the 10 bonus stocks that I'm talking about, all with superior good fundamentals and great recent action. Team gap up on its earnings report, battling to get above the 200-day moving average. Steel Dynamics, I said the steel stocks are coming in. This is a very nice rounded bottom here as part of this double bottom, just showing accumulation. Relative strength really kicked in for these over the last 3 weeks, along with fellow steel producer Nucor. Same situation, nice rounded bottom. Usually you see a lot of jaggedness when bases are being formed, but this is nice, showing accumulation and relative strength on the right side of the cup. That's your third one, CF. So I mentioned steels, and here's a chem ag company also putting in a nice rounded bottom, not jagged, coming up off of it. Relative strength participating over the last 3 weeks as everybody punted steels and ag stocks and chemical stocks about 8-10 weeks ago, but they're forming bases and looking strong, and we want to be ready if these break out. Another one, Albemarle, chemical company, did break out today. Relative strength at a new high, also back-to-back up volume days after an earnings shakeout day. As I talked about before, sometimes you got to survive those. Gets above the 250 area. A lot of power in this today. Beneficiary of that quote-unquote Inflation Reduction Act is ALB. KRTX, we got 2 biotechs here now that have been continuing to show strength since their monster gaps up. KRTX and ALNY. Yes, I'm aware that a lot of these 10 that are not in the 21 over 21 look better than stocks that are in the 21 over 21. It's not always easy to decide whether to punt something out or put it in, but we're going through these additional 10 today because I just felt like they're giving superior strength and needed to be brought. They came to my attention. They should be brought to your attention. Since earnings, Plug gapped up, another beneficiary of the quote unquote Inflation Reduction Act. Plug looking pretty good. TTD, big gap up. I heard some people talking about how wonderful their conference call was. Big gap up, big volume, holding tight 2 days now. After that volume, I got to find a way into this. I almost bought it yesterday. I didn't. I almost bought it today. I didn't, but I'm watching it closely. TTD, GFS. This is one that had me salivating this morning. Gap up. We already own 2 semiconductor stocks. Sometimes you have to add to something if it's going to continue to work and act better than something that you're holding. That's part of portfolio management. But look at these big blue bars here. Shake out on earnings. All it did was shake people out. Was acting great before that. And now money very clearly flowed into it today. 200% average volume, up 12% on the day. This looks fantastic. ANET, another one that had initial negative reaction to earnings right here. But buyers, nothing but buyers since then, forming a really nice base. And finally, CEG, another alternative energy beneficiary. of the you know what. You see the gap up here on earnings and continuing higher. This thing looks fantastic. But again, it's extended, but we want the leaders brought to the populace's attention because it's what leaders do. They lead. And that is going to wrap this version of the Big Show. As always, love your feedback. Email don@revereasset.com. Phone 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the market, it's how much you keep. Be defensive when it's time to be defensive. When the market gives you buy signals, you follow us. We detail them every night on our transparent videos. We like to let people know what they're doing. And if you do it yourself, great. If you're looking for somebody to give you peace of mind in your portfolio management because they've got your downside protected and they'll participate in market rallies, give us a shout. We'd love to talk to you about becoming a client. So finishing the week ending 8/12, this is Don Vandenbord with Just the Facts. Thanks for listening and have a great weekend.